What is going on, everybody? In this video we are going to go over some of my top stocks to run the wheel strategy on and why they are so much more different than they were 6 months ago. So with that being said, let's go on ahead, cue the intro, and jump right into this video.
I know I'm fine, but the money
Okay,
makes
guys, so my stocks that I preference and even indexes will change based on market conditions. Now, everybody sees this rough week here, and this is the TQs. So it's the leveraged fund. This is the MES. This is the future. It shows the exact same thing here. We just had a massive dump a couple weeks ago, and now we are just dealing with it slowly, day by day, building back up. And we had a nice run up after hours here today. We'll see how it opens here in about 30 minutes for the futures markets. But the one thing I wanted to talk about, though, and the couple of companies that I continue to sell options on and I'm willing to wheel on, and another adjustment I've actually been making in all my portfolios. If you guys haven't checked out the smaller account challenge where I'm showing you guys just everything in that account, it's about $15,000, and I show you just how I run it and how I'm very cautious with it. I'm not risk adverse in that account. I'm just willing to just keep chipping away and building equity in different things. So first stock I've always liked, and the reason why, and I forgot to save it on my watch list, is DUK for here. And the reason why I like this is because it's a utility company. The reason why I don't have a position on in this trade right now, well, they have earnings on Tuesday morning. So I just avoid earnings. I don't play earnings. I'm one of the very few people that trades options, or correction, I don't trade options. I sell options, but I do not trade earnings, mainly because I don't know. And if I don't know and I don't have the certainty, I don't want to be in it. And I don't feel like there's anything wrong with that. And other people are the exact opposite. So like, I'm collecting more premium. That's fine, but you're also taking on more risk. You do whatever you need to do to be happy. Southern Company, one that I have traded here in the recent weeks, just had great earnings. These companies are very, very similar to each other, and I have ran the wheel strategy on both of them. I just got off of a phone call with a guy, shout out to Shane, he does the same exact things, and we talked about why I've pivoted more towards the energy sectors, and just because I think they're solid companies that are continuing to have just realistic income, and they don't have to have all that growth in there, and they're good dividend paying companies. I own shares of these companies, and I'm just looking forward more towards a long-term trade without having all the volatility in my portfolio. So you guys do know I still do trade the MES on the futures in that account. I trade the ES on my even bigger account, but I've even lowered the amount of contracts that I am trading. So for the MES on normal, about $1,000 gets me one contract. It's actually a little less, I think it's like $800, but I count it as $1,000. And I'll do 1-on-1 trades and things that are very similar to that. But at the moment, I'm not doing near as many contracts as I have been in the past. Why? Because normally when you have these big down days, and this is something that I think more people need to look at, is normally when you get these big rough, like just injections of red in your charts, they have a couple of waves before we really bounce, and you can see it in the past, and it's something that, I don't really want to be, holding the bag for, and it's just my opinion. You don't have to do this. You can stay risk adverse on these, but I know my portfolio and my strategy. So Southern Company and Duke Energy are two companies that I will do. Again, just watch out for Duke Energy earnings on Tuesday. And that's that on those two. I do love those. They don't make the most premium whatsoever, but they're companies that I am willing to hold, and I've actually done better by purchasing the shares and getting the growth out of these, because again, I don't buy them when they're up at the tops. I sell the options on it, and if I have to buy it at 100 shares at a time, I'm buying these dips basically, because that's when the options get called away, is because when they have to end there. and then I get a 5% run up or whatever the case may be, and then I get my options or my shares called away because I'm running covered calls at that point in time. Another one that people suggest to me all the time that I don't trade and I never have, and I'm not gonna say it's a bad idea, just I don't like the liquidity in it, is O stock. I would rather just get the monthly dividend and not worried about selling options on this one. Just my personal opinion. But the third one is a different sector, and everybody knows Coca-Cola. Why do I do this one? Again, not a ton of premium out there, but over time, and let's just go to a monthly chart because we want the big, or 1 week chart because we want the bigger picture. It just goes up. I don't want to be in stocks that I'm selling in options in that I'm scared to own the shares of. And I think that's one of the biggest point in why we do the wheel strategy is eventually we want to own the share. We want to own these shares and get the equity and then run covered calls on it because I sell my covered calls closer to the money than I sell my puts. And what does that mean? It means I make a bigger profit when it doesn't hit it, or I still get a bigger profit from the premium and I get the appreciation of the shares going up. So it's a win-win situation for me as long as I'm buying good, solid companies. Main point in this video, good, solid companies. Now, the one stock I do like, and 99% of people won't be able to get the benefits of this one, is Microsoft. Now, every business I know owns, or doesn't own, but uses Microsoft. But I have heard rumors, and that's the only reason I'm including this one, is that a stock split is coming. I've heard it's 4-1, so it'll be roughly under $100. It'll basically be $100 a share, and this is one that I will buy up at that point in time and start running covered calls on, even in my smaller account. But if you guys want to do this, do a credit spread. Again, you know the risk when you're doing these. I'm not a financial advisor. And then a couple of other ones that these ones are a little bit harder to do, and they're a little bit more of hedges, kind of, is UCO, which is an oil fund. It is a leveraged oil trade. If you don't understand oil and you don't know a lot about oil, I wouldn't touch it. Same with NUGT. I have one of these, and I have an option that I have sold in my smaller account that I've posted in the last video. It's okay to do if you want to own the shares. Guys, I'm not looking to own Nugget long time though. I'm not going to lie to you. I don't think gold is going to be the best in this position long term. But short term, when people panic about the market, I can buy some of these shares and do a quick flip on these. And you're going to see that it's not moving gigantically here. I mean, yes, it has made good moves, but usually it's a little bit slower. So this won't be a trade that I make every single week. I'm not looking for that. And you got to be very, very aware of those. But Coca-Cola, absolutely, I would sell an option on this, especially on a red day. Southern Company, I sell options on this one. Oxy, which is, again, an oil company, but they got a lot better track record. They had a massive fall, of course, in 2020. What company didn't have that? And, they're just rebounding slowly. This is a Warren Buffett stock as well. And then another one is, and again, this one's a little bit more pricey. Oh, I don't know why it did that. Chevron. So, again, it's a little bit more pricey, but it's a great stock, and you do collect decent premiums on this one. And again, the number one thing here is it just goes up. That is the one thing I think people have to look at, is it just goes up, and there's nothing wrong with that. If it just goes up, it just goes up, and you make money. And again, you guys realize I'm shifting more towards the energy sector and things that have reoccurring cash flow all the time. That is the whole point of these. You guys know I still like touching my futures. ZB bonds, GC, which is gold still, CL, which is oil, which again, oil oil's had a bad couple of weeks too, and then MES, but again, that's SPY. And again, my biggest worry for SPY right now is, and again, I could be 110% wrong, is it looks like we're dead cat bouncing, and I don't want to be holding the bag on a dead cat bounce. I just don't right now, and I don't know where the market's at. And there's a lot of political risk right now, and that's just not something that I want to be in. So I'll be in less volatile stocks in order to get just maybe even a smaller return than I'm used to, but I'm going to get consistent cash flow. Those are the stocks that I am looking at right now to wheel. They do cost a little bit more than normal. I will do another video updating on cheaper stocks. If you guys leave a comment below saying you want a video on the wheel strategy on cheaper stocks, I got a few on the list, and I can definitely expand on things that I am looking at. So with that being said, guys, thank you guys all for watching this video, and I will see you guys in the next one.